Welcome to the weekly market wrap-up. I'm Brent Stafford in this week for Hannah Bernard. Both Canadian and U.S. markets were hammered Thursday as jitters about a Portuguese bank raised more doubts about the economic recovery in Europe. Is this week's slump a forewarning of what's to come? Let's find out. The big three U.S. indices retreated this week, coming off of last week's record-breaking highs. The Dow Jones Industrial Average gave up a total of 153 points over the week, finishing on Thursday with a 70-point slide to close at 16,915. The S&P 500 also faltered this week, finishing with a loss of just over 8 points on Thursday to close at 1,964. And the Nasdaq Composite pulled back over 22 points Thursday to close at 4,396. Now let's turn to Canadian markets, which took a beating this week as well, with Suncor, CN Rail, and Potash Corp leading the slide. On Thursday, the Toronto Stock Exchange plummeted just over 100 points, losing 0.66% in value to close at 15,114. The TSX Venture Exchange fared no better, dropping 9.78 points to close Thursday at 1,022.85. The European banking woes triggered the market sell-off on Thursday as investors became fearful of a contagion effect after shares in BES, Portugal's top-listed bank, plunged more than 17%. Financial irregularities at the bank's holding company led to a suspension in trading of its shares and bonds, prompting a scary flashback as investors were yet again left to ponder the health of the European financial system. The bank's troubles quickly translated into broad selling across global equity markets, hitting U.S. financial firms particularly hard, with shares of JP Morgan Chase, Morgan Stanley, and Bank of America all down around 1%. So should we read today's ugliness as an omen for the markets ahead? Possibly, but it's not advisable. With the Dow, S&P 500, and TSX all riding a recent series of record highs, today's sell-off is likely to be a little more psychological than real. While there is some angst in the market short term, the concerns over the financial health of a little-known bank in Portugal just gave investors a reason to cash in recent gains. It was a good excuse to take some money off the table. Let's turn now to our Canadian news roundup. Things just keep getting more expensive for Canadians. The Consumer Price Index, which tracks changes in the price level of a market basket of goods and services, rose to 2.3% in June, up from 2% in April. Real estate is also getting more expensive, not that we had to tell you that. Royal LePage released results from its national survey, reporting the average price of a home in Canada has increased between 3.9% and 5.2% in Q2 2014, and prices are expected to go up steadily for the rest of the year. Now to winners and losers and our picks for the week. The winner for this week is Digital Ally Inc., ticker symbol DGLY. Digital Ally was one of our losers in March, but they turned it around and shares skyrocketed 127% Thursday, up $4.04 to close at $7.23. The liftoff comes after the company announced it received a patent for its VU-Link digital in-car video system and first VU body camera. Digital Ally develops, manufactures, and markets advanced video surveillance products for law enforcement, homeland security, and commercial applications. The loser for this week is Potbelly Corp., ticker symbol PBPB. Potbelly shares plunged 25% on Thursday after the company gave a bleak report on its latest quarter and slashed its expectations for the year. While the company is forecasting an increase in revenue for the second quarter to $83.6 million, that figure falls short of the $87 million analysts are expecting. Potbelly is a Chicago-based restaurant chain specializing in submarine sandwiches. They have 275 stores in several states, and most feature live music during lunch hours. Well, those are our winners and losers for this week. Now it's time for you to check in on the gains you could have locked in by following the weekly watch list from Robert James and Viral Stocks. Well, that's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earning reports are coming out next week. Here are 3 U.S. stocks to watch. Next week is a big week for the big banks. First up on Tuesday is JP Morgan Chase with an EPS forecast of $1.30 compared to $1.60 in the prior year quarter. Morgan CEO Jamie Dimon continues to helm the financial giant despite being recently diagnosed with throat cancer. Next up on Wednesday is Bank of America Corp with an EPS forecast of 30 cents compared to 32 cents in the prior year quarter. Finally on Thursday is Morgan Stanley with an EPS forecast of 57 cents compared to 45 cents in the prior year quarter. Now here are 3 Canadian stocks to watch next week. First up on Monday is Virginia Mines Inc. with an EPS forecast loss of 3 cents compared to a loss of 4 cents in the prior year quarter. Next up on Thursday is Canadian Pacific Railway Limited with an EPS forecast of $2.15 compared to $1.43 in the prior year quarter. Finally on Friday is Prism Medical Ltd. with an EPS forecast of 12 cents compared to 15 cents in the prior year quarter. The Toronto-based company is one of the largest manufacturers of medical equipment and providers of related services for the mobility challenged. They have over 200,000 different products in their portfolio. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure you subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Viral Network News, BayStreet.ca, and Hannah Bernard, I'm Brent Stafford.